If you wonder how much life insurance you need or how much life insurance you need to practice the infinite banking concept, this is your podcast.
How much life insurance do I need is a common question. This podcast is going to be helpful to a lot of people.
The most honest answer to the question of how much life insurance do I need is nobody knows. And the shortest answer to the question of how much life insurance should I have is probably more. I can say without any fear of error that most Americans do not have enough life insurance coverage to give their family financial peace of mind when they die. You talk to people a lot about how much life insurance coverage they have and how much they need. Would you say that statement is accurate?
Of the hundreds of people we've talked to about life insurance and finances, I'm always shocked at how many people don't have any life insurance at all. And then there's the people that just think the life insurance they get through their group insurance at work is going to satisfy their needs for their family if they're gone. Very, very few people have what I consider adequate life insurance coverage.
Ben, we're glad to have you join us on the podcast today.
Thank you. It's a pleasure to be here. John went down for that training down in Tennessee, so he left the chair empty, and here I am.
And I would say that a lot of times people don't realize the economic value they add to their family, or they don't value themselves enough to purchase life insurance in case they weren't there.
You're 100% right, I'm sure. And I don't know if that's a sense of humility or just being so close to yourself where you forget what it is that you're providing to your family, for your family. And then to speak to your point, Dad, of what you said, people not having the adequate coverage, it's a rough subject to think about sometimes. Because I think when that topic comes up and you think, what if you were taken away from your family suddenly? That's not a pleasant picture to think about. However, if you don't think about it and provide for it with life insurance, it is a much more unpleasant picture if it were to happen. We've seen that happen, and it's not pretty.
Well, very similar to talking with your family about an escape plan if there's a fire. Nobody wants to talk about that, especially right before bed when everyone's going to go lay down and start thinking about what if. But having a plan, a strategy that you plan out and decide means that you don't have to worry about it or think about it very often. Every once in a while you want to say, oh yeah, what is our plan? Oh, that's good. Now, an actual fire breakout, that may not even be exactly what you do, but at least you have a plan in place.
Yes. And because if somebody were not to show up at our designated spot, then we need to know we search for them. On the alternative, if nobody knows that designated spot, and there's some people who show up and don't see other folks go back into danger looking for them, then they may be on a futile search if that person is already removed from the burning house or whatever it is. I remember when we moved here, we discussed what our evacuation plan would be for a fire. When we stay in a hotel room, I like to have a look at the back of the door, see where the exits are. And it's preparedness. It's not fun to think about, especially when we move here to the country and one of our neighbors assures us that the fire department down the road will show up after our house is burnt down. They're not going to get there in time. It's not something you want to think about. And that's with life insurance as well. Nobody really likes to think about their death or the situation their family would be in after their death. But if they do it right now, a little bit of planning ahead of time, if it were to happen, which it definitely could, hopefully it won't, then it makes it much easier on the family. It can give them financial peace of mind. It can allow them to pay off the house, pay off the cars, pay for things they want for their children, nice weddings, help them make down payments on their future homes. Whatever it is that's important to their family, it can be provided for, and that's a beautiful thing.
A lot of people have been led to believe they don't need life insurance.
They have.
And whether they're young and unmarried, or you don't need it, you don't have any liabilities, no one's going to be left with nothing if you're gone. Or when people get old, they're told, oh, you won't need it when you get old because all the kids will be off, the house will be paid off. But that's not what we see in our office. We see people wanting and needing life insurance well into their 6th, 7th, 8th decades.
Yes, we do.
And we see young people needing life insurance so that they can build the financial stability in their life that 70% of Americans can't build without it. It's amazing how easily people are fooled. And Mark Twain once said that it's easier to fool someone than to teach them something that is true that they already believe that's false.
Yeah, that quote of his that says it's easier to convince somebody. It's easier to fool somebody than to convince somebody they've been fooled.
Yes, you got it right.
That was it. I had to think about that one because it's a little bit of a tongue twister, but it's absolutely right. You said something about building a financial foundation and financial stability by owning life insurance when you're young. And that's the beauty of the infinite banking concept and using your life insurance while you're alive, because most people think about life insurance, it's for when you die. And while it is, if you have the right kind of life insurance, you can use it while you're still alive. And that brings a lot of joy to thinking about your life insurance. And maybe that's why we have such a good time here at McPhee Insurance, even though we're dealing with life insurance. We teach people how to use their life insurance while they're alive. We write policies that create cash value that they can use, because Nelson, the founder of the infinite banking concept, he said your need for cash while you're alive is great.
And is greater than your need for death benefit right now.
Absolutely. The death benefit comes later. Everybody's going to meet that point at some time, but while they're alive, their need for cash is much greater.
And I think that's why we have so many clients that they're excited about their life insurance, and then they'll call us and say, hey, I think I need to get another policy. And
Yes.
because they're excited, they're using their life insurance to better the life that they're living right
It's a
now.
benefit for them while they're alive, and that's exciting.
That goes right back to the opening line. How much life insurance do you need? That's one question. How much life insurance do you need for the infinite banking concept is a separate question. The insurance companies sell life insurance based on the first question. How much life insurance do you need based on a needs analysis? And you can look at your needs analysis by taking and saying, well, how much money are you making? What's your income right now? And what is the life expectancy off the actuary tables that the insurance company thinks you're going to live? That's what you need, because if you died today, that's the death benefit you would need to replace your income. And that's what life insurance is sold by the insurance companies.
Income replacement.
There's another needs analysis where we say, okay, this is what you're making, but you don't plan to make that all your life. You plan to increase your income, or you plan to increase your asset purchases, or you need to buy real estate or invest in this. So what are you going to need to do that? Now, that's a different needs analysis, and that would require more life insurance to cover those liabilities as you purchase them.
So, for example, we have a client right now. He owns a dry cleaning business, and he purchased that business. He purchased the equipment, and he had life insurance. But once he made this acquisition, he took on some more debt. And so he is increasing his life insurance to make sure if something happens to him, all that debt is paid off, and his wife has money to pay the mortgage, take care of the kids, plan for, living expenses that she'll have in the future.
And often the best way to provide for that possible need is with term insurance. It's the cheapest way to do it if you're healthy and young enough. But what Nelson talked about in his book, Becoming Your Own Banker, is that if we start with the whole life product and a low death benefit today and increase the premium so that the cash value of the policy goes, our death benefit will replace the need for term life insurance when term life insurance gets so expensive we can't afford it anymore.
And that's what this client is doing. He got whole life insurance, and then he saw how much death benefit that purchased. That wasn't the amount of death benefit he wanted. So now he's supplementing with the term insurance. And he said, this just makes sense. For this amount each month, I can make sure my family has the protection they need. And then, as those debts decrease, and over time, as his income increases and his expenditures goes down, he's going to be able to afford more in whole life insurance. And so he can even convert some of that term to whole life insurance coverage, even if his health goes bad. And he will go into his 6th, 7th, 8th decade of life having good life insurance, permanent. It's going to stay with him for the rest of his life.
And I'm glad you brought that up about the convertible term. And the reason is convertible term is a special term policy. If you have term insurance, that doesn't mean you can convert it into whole life insurance. And that's important for you to know because right now, while you're younger and presumably in good health, you can buy convertible term insurance. But if the insurance you own right now is not convertible, you may not be able to get it later. So if you don't have convertible term insurance, and term insurance is what's in your price range right now, make sure you get convertible term insurance now. It leaves your options open to get that permanent whole life down the road.
The second question in our intro line was, how much life insurance do you need for the infinite banking concept? And that's a completely different question from how much death benefit you need at the beginning.
It is. And you said something earlier, you were talking about decreasing the death benefit and increasing the premium. A lot of the people who want to do infinite banking are looking at that premium amount. How much can I afford to put in to get high cash value? And then whatever death benefit results from that with a good policy design. And if they need to supplement that, that's when they add the convertible term. Can you give us a picture into what it looks like when you're on a meeting with somebody that wants to know how much life insurance do they need for infinite banking? What process do you take them through?
We want to make sure that whatever someone is purchasing is not only affordable for them, but comfortable. Because we're starting a permanent product. It's going to last their entire lifetime. And if they jump into this all gung-ho and say, I'm going to throw a lot of money at it right here up front, then it could be very uncomfortable in a couple of years if something changes in their cash flow. Oh man, I got into something that I can't afford.
That's not sustainable.
This is no fun. And so we always want to educate people and make sure that the amount of premium they're paying is producing the cash value that's going to make their cash flow in their life easier for them, not harder.
That makes sense. You want it to be sustainable long term, obviously, with a whole life insurance policy because it gets better and better with age. If you can't sustain the policy, you're never going to see the best years of it.
That's correct. All whole life insurance policies will eventually build cash value, but we design policies that build cash value immediately. And we do that by taking advantage of the IRS 7 pay period, where we can front load or accelerate the cash value growth in a policy without incurring taxation. And that's really important. We maximize that for the clients. So now they don't have to wait around 20, 25 years before they can really leverage this in the infinite banking concept and go out and purchase assets or refinance debt or just finance new purchases in their life.
So then a very closely related question is, how much life insurance do I want?
That's the real question. If you're using the cash value while you're alive, how much life insurance can I afford? Because you want as much as you can get.
Yeah, you want a lot of cash value because, someone who is looking to do maybe real estate deals, they want to make sure they have a lot of money there to be able to do it. People want wealth. And so how much wealth can they produce? Well, they want to know how much cash value how much life insurance do I want to have?
The whole essence of the infinite banking concept is recovering the cost of things you purchase, whether that's fleet insurance for a commercial corporation, or if it's farm equipment, or if it's real estate, if you're into real estate, or if it's just ordinary expenses in a home where you're financing things through your life insurance so you don't lose the growth on your money while you get to have a pathway to recover the money you're spending.
That's that infinite banking part.
A lot of people settle for whatever life insurance they can get through work. Some people have no life insurance at all, but people who understand the infinite banking concept, how to use their life insurance while they're alive, they want it. They want certain types of policies and they want certain amounts of insurance premiums usually. We're going to talk about how to get the life insurance you want right after the break. Policy design is critical to having cash value early in your policy and having it grow quickly. Regular whole life insurance starts out with little to no cash value and a relatively high death benefit. But Nelson Nash, the founder of the infinite banking concept, said, "Your need for cash during your life is greater than your need for death benefit." That's true. So if you design the policy differently with a paid up additions rider, you can bring that cash value up sooner and cause it to grow better and reduce the death benefit a little bit. This is good because your need for cash during your life is greater than your need for death benefit. Over the years, the cash value and the death benefit are going to grow in a well-designed policy like this until your death benefit is actually higher than it would be in a regular whole life insurance towards the end of your life, which statistically is when you're most likely to need it. That is a win all the way around, and that's the way we write policies here at McPhee Insurance. If you want a well-designed policy that's designed to have cash value early and have its cash value grow quickly, there's two ways you can get it. You can get it from us here at McPhee Insurance. That's the way we write policies. Or if you have an insurance agent you know, like, and trust already, then you can use our resources that we publish on McPheeInsurance.com and on YouTube, McPhee Insurance, to learn how to read a whole life insurance illustration, how a good policy should be designed, and you can use that information along with the agent you know, like, and trust to write a policy that will work for you. And once it is all set up and ready to go and you're ready to purchase the policy, if you want to double check it, you can use our insurance review service and we'll let you know if it's a good policy or not. It's well worth the $75 to have that peace of mind. If you want good life insurance or you want your life insurance reviewed, you can contact us by phone at 702-660-7000 or by email. Our email is team@mcpheeinsurance.com. I said that a lot of people settle for the life insurance they can get. I'm talking about group life insurance through their work. A lot of times work will offer people group life insurance, usually at a pretty reasonable rate, certain amount of coverage, and they just say, yeah, sure, why not? And that's the life insurance they end up with. I was playing pickleball with a couple siblings and a guy named James at a local park the other day. And James is in a very similar situation. He wanted to know what we did as a family. I told him we do life insurance, and he said, oh, I probably need to talk to you because I know I have some life insurance through work. I'm not really sure how much. And I have a policy, I think it's through State Farm. And he wasn't 100% sure how much coverage he had there either, but he knows it's something that he should have more of. And he wasn't really sure how to figure out or how to learn what he needed to know about it. So, of course, I sent him to McPhee Insurance YouTube channel so that he can find out how life insurance works and figure out how he wants to tackle that need. And, of course, he can contact us from there as well. But that is, I think, a lot of what people find themselves in. A situation where they have some coverage because they know it's important, but they haven't thought about it a lot. And so they don't have the coverage they need.
I was talking to a person the other day, and she was saying, yeah, I thought I was way ahead of my game. I bought insurance when I was 22 years old, and none of my peers were even thinking about it then. And then later I found out that it was a ripoff. I was paying way too much. Kind. I bought something that wasn't going to do me any good, and it was paying more than what I was ever going to get in death benefit. And so I switched, and we were reviewing that policy she switched to, and she switched into the same thing because people just are not educated about what it is that life insurance does for them, what they should be paying for it, or how it works. And that's not their fault necessarily.
Sometimes they get the wrong information, and that's unfortunate. That's really disappointing. So we always, at McPhee Insurance, we always try to make sure that people understand the information we present. It should make sense to you.
Education is so important, and we spend 90% of our time educating people about what life insurance is, how it works, how it's going to solve a problem in their life, and they're the ones that make the decision. We're not forcing life insurance onto people because we're life insurance salesmen. We want to make people's lives better, not more strenuous.
It is a little bit rough to be life insurance salesmen because, at the end of the day, we sell life insurance. That makes us life insurance salesmen. People don't like life insurance salesmen, and neither do I most of the time. I think it's public opinion puts them just under a used car salesman. So, they dislike used car salesmen more, but they dislike us second, and that's not a warm, fuzzy feeling, but I understand why we have that reputation as insurance salesmen. There's a funny song we were all listening to and laughing about the other day. That song that was written about New York life salesmen.
Back a long time ago.
Yeah, it's an old song, but This life insurance salesman, he finds his client everywhere. Stephen, can you put the song in the podcast for us? Stephen's nodding his head. Okay. You get to listen to the song. If you're watching this podcast, you get to listen to the song. Even if you're listening, you get to hear this song. It was a hoot. Our family was sitting around the table just laughing about it.
I used to be as happy as a squirrel in the tree, till a man who sold insurance made a nervous wreck of me. He followed me persistently, and if I'm put away, that bird who sold insurance made me what I am today. Oh, there's no one with endurance like the man who sells insurance. He's everybody's best friend. He will follow you and fret you, but remember he will get you, for he gets us all in the end. In spite of every way I tried to leave him in the lurch, he chased me into subways and he followed me to church. I even spent a night in jail in my desire to hide, but in the morning George Insurance waited just outside. Oh, there's no one with endurance like the man who sells insurance. He's everybody's best friend. He'll be sweeter than molasses, but when he puts on his glasses, well, he gets us all in the end. One day at Coney Island, when I went in for a swim, a man swam up beside me who was no one else but him. Said he to me, I'm glad to see you love the ocean wave, but our 20-year endowment is the only way to save. Oh, there's no one with endurance like the man who sells insurance. He's everybody's best friend. He is always bright and snappy, and no wonder that he's happy, for he gets us all in the end. One day I saw him coming, so I quickly climbed a tree. But George Insurance saw me too, and he climbed up after me. Said he to me up in the tree, I'm fond of nature too, but our 20-year endowment is the policy for you. Oh, there's no one with endurance like the man who sells insurance. He's everybody's best friend. And the harder that you make it, believe me, he can take it, for he gets us all in the end.
So yes, we understand the bad rap that life insurance salesmen get. And then we look at some of the products that people have been sold, like the lady you're talking about here. She was making a good move, or moving in a good direction at, what, 22, did you say?
She's 22 when she first bought her first policy, yes.
And she got the wrong thing because somebody sold her the wrong thing. That just feels devastating.
And then there's myself. At age 25, I was approached by an agent that understood the value of whole life insurance. And I told him, no, I'm going to buy term and invest the difference, because that's what I had been taught in school.
Yeah.
That's what I had heard all my life. All you need is term. And he said, you will be sorry before you turn 65. And I wish I could go back to Nathan Steinbach and say, you were right, but I learned it at 45 instead of 65.
Thankfully. It saved 20 years.
If we go back to the insurance that people are offered through work, I mean, that is group insurance and they get it. But what happens when they leave their work? They no longer have life insurance.
Right. Sometimes they'll get a conversion offer out of that. Usually the rates aren't very good.
Not very good at all.
Maybe it's something at some point, but you can do a whole lot better than that.
Or what about the people that call our office that are in their 60s or early 70s and say, my term insurance is going to go to $20,000 next year. What can I do?
That's a reality.
I want
And
insurance.
that we're talking about the premium. That's
Yes,
the premium.
It's
this year.
going up several times at a certain point. And that's a reality a lot of people don't face. Yes, term is the cheapest way to start, but you better have a plan in place within that time period to get something permanent if you want to carry life insurance your whole life, because it's unaffordable at some point.
Yes.
We start with the needs analysis because people need life insurance. But most people are contacting us to learn how to do the infinite banking concept. And so when we design that policy, we start with the premium. What is affordable? What is comfortable? And we build the highest cash value that the IRS will allow with that policy so they can start managing their cash flow better, so they can start developing wealth, because that's what the infinite banking concept is all about.
And we're looking at the policy illustration to make sure that after a number of years, the cost of the insurance is overcome, and now you've got greater cash value than what you've paid for the policy. And once that happens, that will continue to happen for the rest of your life. You pay a premium, and the amount of cash value produced in that year is going to be far greater than that premium. And however long you live, the numbers just get better and better.
On an average, what we see is that by year 5 or 6, and of course this depends on health and age, but on an average, the premium that you're paying for whole life insurance is less annually than the cash value growth in that year.
That's happening in my policies right now, the ones you started on me when I was a teenager. I pay the premiums, and the cash value goes up by way more than that. I don't know how many years those have been, but it hasn't been very long. Something you said about looking at the illustration and seeing that growth, I think that is one of the best options that's still available to people, because you can't trust life insurance salesmen's word in a lot of cases. But if somebody looks at the actual policy illustrations where it says guaranteed values and looks at those values, they will be able to tell if it's a good policy or not.
Well, and
understand what they're looking
at. The thing with the life insurance illustration is there's so many numbers on it. And like you just said, if they know what they're looking at. Well, at McPhee Insurance, we make an appointment where you can look at the numbers with us, and we'll explain what those numbers are.
In fact, you did a video on how to read a life insurance illustration. It's on McPhee Insurance YouTube channel. And so, if you're looking at a policy, looking at purchasing a policy, or wondering, do I have a good policy? You can look at that video and you'll learn how to read a life insurance illustration. If you're wondering if you're analyzing your policy correctly, then you can use our independent review service here at McPhee Insurance. We started this a number of years ago because people were wondering if they had good policies or not. And for $75, we will analyze your policy, and then we will give you a report on what we find. And for the peace of mind, it is well worth the $75.
When it comes to life insurance, time is not on your side. Unless you already own whole life insurance, and obviously the cash value is getting better with time. But if you don't own life insurance, it's getting more expensive for you to buy on your life. So once you have the right information and can be sure you've got a good policy, buy it right away. That's the best deal for you. It won't get any better if you wait.
Davy Crockett, the American frontiersman, he had a motto that he lived his life by, and his motto was, be sure you're right, then go ahead. That was many, many years ago, but believe it or not, that's a pretty good motto for buying life insurance. Be sure you're right, have the right policy, the right design, all of that, then go ahead. Time is not going to make your insurance less expensive. The policy that you can get right now is probably the best deal that you can get.
If you've purchased or are in the process of purchasing from another agency and you're wondering, is this policy right for me? Then take advantage of our insurance review service. It's well worth the $75 for your peace of mind. And come back next week when we're going to talk about all the problems with the infinite banking concept right here on Wealth Talk.